JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 6th of November 2020. So yep, welcome everyone. Welcome to this Friday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, some of the charts that we looked at this morning, just to see how everything's getting along. But before we do that, as always guys, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, jumping into the charts. Now the first one I want to pick up here is on the German index, DAX. So this morning I talked about this idea where we could see a bit of a correction here to the downside towards this area near the 200-day EMA or this 12,341 zone. As you can see, we had a perfect move towards that area, a nice rebound and a push back higher. So in a way, we can say that this scenario has worked out nicely within one day. Although, don't get me wrong, maybe the index might stay somewhere around here, and then going into next week, for example, it could let's say retrace a little bit back down again, and maybe it could test this area once again and basically then rebound and push higher. So at the moment I'm gonna take this carefully because you can see that, yeah, yes, we did have a nice push higher, but it didn't really kind of rally that much. So basically it seems that there could be a chance that the index might stay here for the week basically, and then keep well, probably traders are taking a lot of profits right now, so basically we could see this one stalling here and remaining here. So in other words, the whole action could go into next week, unless there's something's gonna finally show up here in the US markets. I mean, maybe the US markets will get before today's close, maybe they'll have a huge move either way, which could cause of course the DAX cash index to move in the same direction as well. So basically in that case we could see a huge gap, opening gap either to the upside or to the downside on Monday morning. So of course we'll continue monitoring this very carefully, and we'll continue monitoring the situation surrounding the whole U.S. elections. And of course, for now, at the moment, it seems that Biden is leading the way. So, yep, let's see how all that is going to work out. But for now, it is how it is. Looking at this technical picture, we can see that the price is stalling here near this 12,540 territory that I spoke about previously. And in a way, there is a chance that we might see this one staying here for a little bit, but going into next week I really would like to see this one pushing towards this downside line taken from the high of the 3rd of September, and then we'll take it from there, guys. Now jumping into Dow Jones Industrial Average, now a similar story here. Basically the index, after a nice strong move here to the upside, as you can see, it kind of almost had all these runaway gaps here starting from Friday of last week. Basically these runaway gaps, this is a bullish indication, of course. Now, for now, basically the index is kind of looking at this picture. Of course, the market is not open yet, but so far, I mean, after yesterday's close, we can see that still remains below this downside line taken from the high of the 3rd of September. And if we look at the cash index right now and where it's currently sitting at, we'll see that the price is roughly around the, let me just zoom in here a little bit on my charts, at around 28,450 mark, maybe just slightly below that. So basically we'll have another probably gap, a little small gap here to the upside, opening gap to the upside, but we're still below this downside line. So now, of course, the big question, will this downside line continue to provide resistance? If it does, then, well, maybe a bit of a move lower next week could be possible. And in a way, this could come in line with the whole idea that if Biden wins, for example, then the markets might react negatively, the equity markets might react negatively and could drift to the downside. However, of course, if the Senate, the majority will remain Republican, then we could see basically this index, or not only this index, but all other indices kind of correcting, initially correcting lower on the news that Biden won. But then if the Senate remains Republican, then we could see a nice rebound here and a push back to the upside. So of course, like I said, for now, this is just an idea, guys. Keep that in mind. It might work, but of course, we'll see how all this is going to play out. But for now, the technical picture shows that if we get a further push north here, but we struggle to overcome this downside line, then yep, another slide here could be possible. So keep your eyes on this one. But if this downside line gets broken straight away, and we see a push above the, well, not above this level right now, but a push above this hurdle right here, and let me just get rid of this as well. So a push above the 28,712 zone in a way could open the door towards some higher levels. Initially, we'll target the highest point of October near the 28,958 zone, and then we'll take it further. But for now, guys, it is a very interesting moment right now. So let's see how far Dow Jones can actually climb higher. DXY jumping into another index, but this one is a dollar index, and look at this beautiful move here today below this 92.47 territory. I talked about this index this morning, and basically what I was saying that in a way, if we get a nice drop below the 92.47 zone, then, well, we could consider maybe a bit of a decline here towards the 92.24 level, which we got perfectly. Look at this beautiful test. However, it didn't really travel further south. I mean, of course, understandable. We do have the we do have a bit of a tricky situation right now here, so with the US elections. So yeah, we'll see if the dollar reacts after the final results are announced. So that's why for now it may kind of move sideways a little bit, so be very careful on that, don't get caught out. Of course, the weaker dollar is giving a boost here for gold, and look at this beautiful move here in gold. This morning we were hanging above this area still. We were actually retracing this morning when I was covering this asset in my morning video. If you remember, then I was saying that if we see the price balancing above the 1933 territory, then it has a good chance of drifting higher again. And look at this beautiful move. It did travel higher again. It pushed pushed north. It didn't really quite reach, let's say, my next target here, which is around the 1972 territory. But don't get me wrong, we'll continue monitoring DXY here, and if DXY starts drifting heavily to the downside, then, well, gold could continue pushing further north. Maybe we could even see a test of that psychological 2000 zone. So let's keep an eye on this one. Let's see how this is going to play out. But yep, be very careful. For now, yes, the short-term trend is still to the upside, so we'll continue targeting this 1972 territory, and then it'll take it from there. Silver, also haven't looked at silver for quite a while, but basically from the technical side, not to mention the fact that it's also benefiting from the weaker dollar, from the technical side, you can see that this level here that I spoke about previously, the 25.24 level, got broken. Yesterday we had a nice daily candle staying above this area, and today we're, although we had this little false breakout here, still it's pushing back higher, and my next target is the 26.05 level, which, as you can see, acted as a very nice area of support previously, but now it could take the role of resistance. And then if that is just seen as a temporary obstacle on the way here for the bulls, then of course the next target is the 27.62 level, marked by the high of the 15th of September. Now, like I said, from the technical side, if this continues to trade above this 25.24 level, yes, I will aim for higher levels. If it doesn't, if it starts dropping back down now, then of course all eyes are going to be on somewhere around here, basically the 24.50 level right here. And if we get a nice drop below this could also place the price below the 21-day EMA, and more sellers could join in. So yep, keep your eyes on this one, guys. Could be quite interesting. For now, let's see how all this is going to play out, but yep, it's leaning a little bit more to the upside. Ripple, so of course the laggard of all cryptos, the top cryptos I'm talking about, and if Bitcoin and Ethereum and Litecoin and even Bitcoin Cash have been exploding nicely to the upside, this one, yes, it did make a move. However, not as huge one. I mean, percentage wise it's still a decent move, but still look, it didn't really clear the previous highs here. So basically this level right here, if all the other cryptos manage to clear and go for a higher high, Ripple is still struggling. So basically it's struggling with this 0.26 territory, and in a way, given that we can see that Bitcoin, for example, right now is kind of the upside momentum seems to be fading away a little bit. This is where the concern is on Ripple. Can it actually continue rallying if other ones will now start correcting lower? So that's why I'm not going to rush into anything yet. The main thing that I'm going to say is that I would like to see that daily candle staying above the 0.26 territory. If it doesn't, well, I mean, well, it could reverse back down again. So that's why, guys, be very careful here on this one. It's a difficult one, but let's see if it proves to be actually positive as we think it could be. But for that, in order to aim for some higher levels, I need to see a nice daily candle staying above the 0.26 territory. Now, jumping into a few pairs, and by the way, before I continue with the pairs, I mean, we did get some data today from the US, from Canada. We did get their employment figures. So basically, from the US, we did non-farm payrolls came out but slightly better than the forecast. So which is which is kind of good news for the US economy. And the unemployment rate as well improved significantly, and going from the previous 7.9 and dropping by 1%, going to 6.9%. So that's wonderful news for the US economy, as I said. Basically that kind of helped build a little bit of morale, positive morale. But to be honest, I mean, still the main focus is falling on the US elections. So it's kind of the good news the good US data is kind of overshadowed by the whole US election thing. So yeah, I mean, take it as it is right now, but that's the main kind of focus on right now. So let's see how that develops. And Canadian numbers actually disappoint a little bit. So the employment dropped. So from the previous 378,000 to 83,000, so roughly around those figures, and unemployment increased by sorry, no, it didn't increase. It dropped from the previous, but it came out worse than the forecast. So basically, it's stuck in that little golden middle, if I can say. I mean, the previous figure was at 9%. The forecast was for an improved 8.8%, but the actual number came out at 8.9. So again, that's not as good. It's not good. It's not bad. So basically, it's kind of neutral, I would say. Could be better, but yeah, it's still okay in these difficult times. Now, looking at Aud Jpy here, I mean, of course, you can see that the weakness of this pair, the fact that the pair has been kind of drifting in the red today, of course, shows that concern of traders, and it kind of increases that risk off and the possibility of seeing a risk off environment. So the moment, again, we're going to be very careful with this one, and I'm going to stick to the same analysis, same idea that I talked about yesterday, that if you want to aim for some higher levels, wait for a push above the 75.48 zone, because as you can see, yesterday even we failed to move above this hurdle, and that's why this hurdle becomes quite an important one to watch. So a nice good pop above it may open the door towards higher levels, guys. In terms of the downside, well, I still need to see a drop below the 74 territory in order to consider some lower areas. The USD/JPY continues to, well, I wouldn't say continues, but remains a bit in limbo today, to be honest. It did try to push higher initially, but then sold off, and basically it's kind of stuck here. I'm still aiming for this 103.05 level right here, which is marked by the low of the 12th of March, and that's my next target. There is a possibility that we could see the rate stalling around here, maybe then recovering somewhat. In other words, what I'm looking at here is a possible move, something like this. So I'm going to continue targeting the downside. And for now, that's going to be my game plan. If this area provides good support, this 103.05, then we might see a bit of a rebound here back to the upside. Jumping into Gbpnzd, quick update here. So the pair is still flirting with this hurdle. I talked about this pair a lot this week. So basically, the pair is struggling with this area, this key support zone. So today we did get a nice push lower again, but once again the bulls managed to lift the pair back above this 1.9347 territory, and in a way, if we don't see that strong move below this 1.9325 territory right here, then, well, I mean, the downside is still off the table, although it is kind of leaning a little bit more towards that idea, or should I say we are leaning a little bit more towards that idea, but we need that confirmation drop here, and ideally that daily candle staying below this 1.9325 zone. So let's continue monitoring the situation here. Now, one of my favorite ones, Euro Turkish Lira. If you remember, this morning I talked about this one, and basically look at the explosion here. I mean, I kept talking for about 2 months already, guys. I keep saying don't go into those shorts yet, because it's just a one-way traffic. I mean, you can see how bad the economy is performing right now in Turkey. So and of course these new lockdowns are not really helping out. For now, basically that's the situation. It popped above that previous all-time high today, and look, it created a new one, hitting the 10.7, actually hitting the 10.20 territory, and basically now the question is, where will be that ceiling? For now, there's no clear ceiling, and to be honest, let me just remove all the drawings, because these are lines that I've drawn here are no longer valid, because we have moved so drastically here to the upside. And look at this move, guys. I mean, eventually, don't get me wrong, this will come back down, but again, it's at the moment we cannot see any indication of that happening. One thing we can try to draw here is maybe a potential short-term upside line here, which is still in play, and in a way we can say that if this upside line gets broken, then yes, we could start looking at some lower areas. And for now, probably I'm gonna stick to this idea, and I'm gonna wait for a break of at least of this short-term upside support line drawn from the low of the 22nd of October in order to consider at least some lower levels, but at the moment it's just not happening. So let's continue monitoring this one. Euro CHF. Now, Euro CHF here, also a bit of a mess here. I mean, I haven't looked at this one for quite a while, so let me redraw everything here. But the most important is that it still is trading below this little short-term downside resistance line taken from the high of the 28th of September. The pair is also struggling kind of to go a little bit further down, and what's happening here basically, I can draw a few levels, like for example I can keep this one, the 1.0678 to 72 territory, but a little bit probably more important thing to draw here will be this little short-term upside line, which is also kind of seems to not allow the pair to go for a lower low. Instead, it's creating these higher lows. So in other words, guys, we are getting a bit of a squeeze here. So it's coiling up. Let's see which way this is going to pop. And if you want to look at some higher levels, basically wait for at least for a push above yesterday's high near the 1.0727 territory. And if you're looking for some downside now, of course I would prefer to wait for a drop below this level, below the current lowest point of this week. I don't know if we're going to actually overcome this, but let's call it for now a current lowest point of this week, the 1.0648. A nice good drop below this area would confirm a forthcoming lower low, and then excuse me, the next target here could be this 1.0606 level. However, we could start already looking at some lower levels if we get a drop below this 1.0672 territory right here. So, yep, keep your eyes on this one, guys. It could be quite interesting, but for now, it's not really doing much. We're waiting for this one to make a nice breakout. And finally, Euro USD. So, Euro USD is pushing nicely to the upside. This morning in my morning video, in my Traders Espresso, I did mention this idea that my next target is this 1.1867 territory, but if that gets broken, then yep, higher levels could be met. Now, what's happening here is that yes, we are breaking this level. The only thing is that it seems that for now the bulls are not really feeling that comfortable. Well, of course, understandable, because we did have already a decent rally to the upside this week. So basically now the big question here is, can we stay above this area today, above this 1.1867? If we cannot, then well, I mean, maybe we could see a bit of a correction here to the downside going into next week, but if it stays here, then yep, I'll continue targeting the upside, initially aiming for this 1.1917 territory, and then maybe towards this 1.1996, slightly above it. Of course, we do have that psychological 120 territory as well. So again, let's keep an eye on this one. Could be quite interesting, but for now, I would say it's no one's game, because although the pair is in the positive territory, it's kind of stuck here near this level, near this hurdle. So yep, let's be very careful for now and continue monitoring the price action. I would probably say that let's leave it for next week, because let's not improvise too much, guys, because again, given the uncertainty surrounding the US elections, although it seems that Biden could let's call it could win, still, let's like I said, for now, be very careful, cautious, and then yep, we can maybe going into next week, we can pick up on this one. Well, actually, not maybe, but we'll definitely pick up on this one, and then I'll reevaluate things again. But for now, probably if you're still comfortable with trading that, do what you have to do, but have your stop loss in place just in case this suddenly reverses sharply against you. And yep, that's why, guys, for now, it's like I said, be very careful with the current market conditions. So I'll have to wrap it up here. Thank you very much for watching and listening, guys. I really appreciate your time. I really appreciate your views, your likes, and I really appreciate your support this week. Thank you for tuning in and watching this one, my Traders Espresso and Tea Time, of course. And yeah, I'll see you next week on Monday at my Traders Espresso, 7 o'clock GMT time, guys, where we'll have a look at the markets again, and we'll see what the week has installed for us. So yeah, have a wonderful weekend, everyone. And I'll see you later. Thank you very much, and bye-bye.